can tell you this with 100% degree of certainty. I would not be an entrepreneur today if I didn't understand the fundamental concept of a profit and loss statement. And the reason why this is so important, or what they call a P&L statement, the reason why it's so important is because it'll truly let you know how profitable you are in your business and address some of the things that, if you see a lot of the online gurus talk about how much sales that they're making, that they never really address. They make you think that because they have $1 million in sales that their company is profitable. Truthfully, they're just trying to sell you on the idea of purchasing a course. But today I'm going to talk to you not only about what is called revenue, which is sales, which is the top line, but I'm going to talk about the bottom line, which is profit. So that said, let's just get into it. When you're looking at a P&L statement, a profit and loss statement, there are really only three areas that you really need to account for. One is the total revenue, in other words, the total amount of sales, which are the top line, okay? And the cost of goods sold, in other words, what it costs you to create your product, and all of your expenses to actually run your business. And this is how you can tell if selling a product is truly making your company overall profitable based on everything that you have to pay and what it costs to actually create your product, or COGS. So in this example here, let's just say the total revenue is $1 million right here. $1 million, which represents sale. Revenue and sales are synonymous. It's basically saying the same thing, right? So your total sales are $1 million less cost of goods sold. In other words, COGS, cost of goods sold, is what it costs you to actually create your product. And in this case, to sell $1 million in product is going to cost you $378,700. So when you subtract the COGS, cost of goods sold, minus your total revenue, your gross profit, and I'll tell you in a minute why they call it gross profit, is $621,300. In other words, your gross profit margin, because I know if you've ever watched Shark Tank, they're always saying, well, what's your profit margin? And you know, people say, oh, is it 50% or 60%? And so this is where they're getting that number from. Now, you have to take this thing one step further if you're an entrepreneur and you're looking to run a business and not just create a side hustle. You have to understand all of the expenses that are in the business. Now, in this particular example, these are most of the typical expenses that you would have to pay for. There might be a little bit more or a little bit less depending on your type of business and the type of product you sell. But you can definitely believe that there are always going to be accounting and legal fees, advertising and marketing fees of whatever that product and service is. I'm not going to talk too much about depreciation. I talk a little bit more about that when I talk to you about a balance sheet. But just know that you can, every year you can write off, even though it's showing it as an expense, you can write off when say equipment gets older. You can actually write off depreciation. Of course, you'll have utility bills, insurance, interest and finance fees, or simply like say if you borrowed some money, or whether it's from a friend or or family members or from a bank, you always have to pay some kind of finance fees or interest on that money. And if you have an office, of course you have rent. If you own, like say, a restaurant, you'll have repairs and maintenance. You can have that. And of course, which is the biggest expense here, you can see here is the cost of human capital, which are wages, salaries, and benefits. Benefits such as healthcare insurance, such as 401k. All of those different things primarily eat up the money that you make. And of course, other expenses, it's always good to have like a category for other expenses, because it's kind of a catch-all. There might be some things that you have to pay for, like say, office supplies, etc. that would fall like under other expenses. In this particular example, if your gross profit is $621,000, less your expenses, which your expenses are $401,500, your total net profit, meaning what you actually get to walk away with, is $219,800. So what does that mean? In short, that means for every $1 million in sales, you're only walking away with $219,800, which gives you, as far as margin wise, 21.9%, or say roughly 22%. I really want you to understand the primary reason for why I'm sharing this with you. Oftentimes, people are trying to sell you courses, and they're trying to show you how much revenue they're generating, but they're not giving you the complete picture. If you're an entrepreneur, you need to know about all of the expenses. You need to know about what it takes to actually create your product or service. You need to know what your true profitability is, because a good rule of thumb in any business is, once you understand this, the only way for you to, or the easiest way for you to increase your profit is to simply do this. Whatever it costs you to make your product, COGS, cost of goods sold, try to decrease that, okay? Your expenses, try to decrease your expenses. And so when you lower the COGS and you lower your expenses, your profit margins and your profit goes up.